Hello, I am Sam Trader. Welcome to my YouTube channel. Hopefully you have subscribed to my YouTube channel. Having traded for more than 10 years, here are a few things that you should avoid, the mistakes that you should avoid doing. That is emotional trading. Emotional trading is when you trade based on fear or greed, and emotional trading can go wrong in several ways. Through formal trading is when you trade, this is fear of missing out. Fear of missing out is when you make an entry when you're not supposed to. Holding losing trade, when you hold trades for long, losing trades, that's when your emotions kicks in. Or revenge trading is when you try to recover lost amount of money or the losses that you have made. You try to push in orders after orders without proper analysis. Something you should avoid is trading red news event. Red news events, these are the news that are very volatile, and most likely you do not know the outcome of this news. So it's the best thing to do is avoid trading red news events. You can wait for 5 minutes until they are done and for you to make your execution. That is the only best way you can do. That is the only strategy that you can use. You can wait for 5 minutes, you can wait for even 30 minutes for that volatility to calm down. So something else you should avoid is trading when you do not have a risk management strategy. Once you do not have a risk management strategy, it's best thing you just need to keep off trading until you have one. Come back when you have one. If you do not know how much you're willing to risk per trade, you do not know how much you're willing to expose your account, it's best thing to stay out of trading. These are mistakes that you should avoid when it comes to trading. So as a good trader, you should always have a risk management strategy. Something else you should note is when it comes to trading, there is 100% risking. So as a trader or as a day trader, note that investing more than you can afford to lose will affect you emotionally, and it may go even deeper. So the best thing you should know is that when it comes to trading, you should risk amount you're willing to lose. Do not come in with your rent or school fees. Make sure that you come in the amount that you are willing to invest in the market. It is not related to any bills, to any of your external bills. So when you come to trading, make sure that you understand that trading or investing involves risking. So avoid investing more money that you're willing than you're willing to lose. Something else you should avoid is if you do not have a trading system. A trading system is a system that has a entry and exit plan. When you do not have a trading plan, you do not have entry plan, you do not have exit plan, avoid trading until you have one. Come back when you have sorted your trading system. You've known how much you're willing, at what point should I make my entry, at what point I should exit this entry. Develop a trading system, and a good trading system is a system that has been back tested for a longer period. Can be 6 months, can be 1 year. So make sure you have developed a trading system that you can rely on over and over. So something else you should avoid is gambling. This is when you say it is all or nothing. You risk everything just to gain nothing, or you gain all. You see, there are moments where you as a trader, you get that kind of behavior or that kind of thinking. You risk everything or nothing. So you should avoid gambling. That's kind of a gambling mindset. You should avoid that. Actually come with a system that works so that you can be able to tackle gambling. Until you have a good trading system, until you have